All right, let's get started. So first of all, thank you all for joining us. It's a pleasure to have you here. Good morning, of course, and welcome to our webinar, Navigating Argentina's COVID-19 and Debt Negotiation Scenarios. My name is Sebastian Silva, and I am a Client Services Director in the Latin America team here at Duggar Frontier. We're coming to you today from Washington, D.C. and New York City. So before we get started, I realized that some of you may potentially be new to the company. I thought I would spend a couple of minutes to provide you with a very quick overview of our firm and how we work with executives at major multinationals. So if we switch over to our company overview slide, there we go. For those that don't know us, we're a market intelligence and consulting firm that provides tailored solutions to drive growth for our clients across the B2B, healthcare, consumer, and technology sectors. Our dedicated teams serve as advisors to clients, delivering the market and industry knowledge they need to succeed at all points of the business cycle. Through continuous research and insights, custom consulting solutions, and transaction support, we provide our clients with timely, actionable insights designed to support strategic decisions in fast-moving markets. Our company is headquartered in Washington, D.C., with offices in Michigan, New York, London, Paris, Berlin, Singapore, Shanghai, and Bangalore. For more information about us and our services, please visit www.duggarfrontier.com. So with that brief overview, it is now my pleasure to introduce our presenter, Alex Schober. Alex is our senior analyst for Latin America and covers Argentina, Chile, Peru, and Uruguay for Duggar Frontier. Alex, over to you.
Thank you, Sebastian. Just to introduce myself a little bit further, I've been at the company for about 2.5 years, covering the 4 markets that Sebastian just mentioned. And before that, I got my master's in Latin American Studies and International Economics from Johns Hopkins SAIS, and also had the pleasure of living and working in Argentina for about 2 years combined. So it's always a pleasure to be talking about this country.
Excellent. Thank you very much, Alex. Very timely session for sure. So let's get started here. To touch on structure briefly, our teleconference is going to consist of a 45-minute moderated discussion, followed by a Q&A section at the end. So with that, I'll ask participants that if you have any questions or points of clarification regarding any of the topics that we cover, please send them to us via Duggar Frontier webinars on the chat box on the right-hand side of your screens. I will do my best to ensure that they're addressed during the Q&A period. And throughout the session, of course, we'll be collecting any comments you might have. So Alex, over to you so you can kick it off and get started with the session.
Great, perfect. Let's get started. So for those of you who are maybe not so familiar with how we carry out these presentations, one of the things that we really like to do is gauge the audience, see how your company is doing in these markets, and to see if it aligns with our opinions or not. And so throughout the presentation, we're going to have a few live polls. And basically, what I need you to do is really just type in this email address into the Chrome or whatever online search engine you have on your phone, pollev.com/dfrontier560, and it will prompt you to ask for your name. Obviously, we don't need for you to say your name, but it would be great for us if you could type in the industry that you belong to. This will allow us to separate any questions that we have later on in the presentation by industry, which could end up being useful for your business to see how you compare against your colleagues. So I'll give you a second to type this in your phone, and then we're going to immediately kick off with a polling question to just at least test the software on your phone. So great. Here's the first question. It's a little bit more of a fun question, definitely not one that necessarily is going to go into any of my outlooks. But so the question is, when social measures end and are lifted, it's safe to mingle, I will do blank. So all you need to do is click the answer choice that you think you'll end up doing after the social distancing measures are lifted, and then we can go from there.
Wow. A lot of barbecue fans.
I don't blame them. Great. All right, so assuming that we do have a good amount of people using the polling software, I'll probably move forward from this question and 5 to 10 seconds. But I am very happy to see that a lot of people are planning on going to an asylum immediately after this. I know that would be what I would do. All right. So I am going to move on to the next question here, which again is a little bit more of a serious question. This is going to kind of dive us right into the meat of the matter. And so the question really is, by how much you estimate COVID-19 will impact your revenues this year in Argentina against your original targets. So just go ahead and choose one. You can see the first three choices are falling short by certain amounts. And then the last couple of choices are actually surpassing your original targets by certain amounts. Obviously, there's no impact other. And if you're very lucky, maybe you're surpassing your original target by a significant amount. Great. So it looks like we're getting some answer choices in here.
Mm-hmm. Alex, I wonder how some of these numbers compare to what you've been hearing from the Argentina teams you've been in touch with over the past few weeks.
Yeah, I would say this is pretty aligned with what I've heard from Argentina teams over the last couple of weeks. And honestly, it's pretty aligned with what we're getting from our regional GMs and country GMs of other countries in Latin America. For example, we had our Mexico webinar 2 days ago, for those of you who were able to attend that. And the answers to that were pretty similar to the ones that we're getting right now, around 38% for revenues falling short of the original target by 11 to 20%. A good amount of people in the 6 to 10% range. So it looks like it's about the same, but I am surprised to see that no one's actually surpassing their original target. I know that there's very, very few industries that are actually thriving in the current scenario that we're in now, but we usually have one or two people to answer the surpass original target question, which always makes us wonder who it is.
Right.
Great. Well, I think that should be a good benchmark. And now that we've gotten some more answers in, it does look like we are getting a little bit more of a skew towards the 20% range, more so than we did in Mexico the other day, which is definitely really interesting. And also not surprising given Argentina's complications. All right. So before we formally kick off the presentation, I wanted to walk you through some of the key takeaways. Obviously, I don't want to steal my thunder too much for the presentation, and I'm really just using this slide as a good benchmark summary page if you want to tell others what you learned about today. So the first one is that Argentina is really facing the perfect storm. We can't really deny that COVID-19 came to Argentina at a pretty inopportune time. Obviously, you could say that about any country in the world, but Argentina was entering its third year of recession, had some serious debt burden that they need to take care of. The inflation situation has been chronically high for a while. So all this is to say is that Argentina is facing a bit of a multifaceted crisis here. The second thing, which is a little bit more of a positive thing to come out of the COVID-19 situation as it pertains to Argentina specifically, is Argentina's been pretty good at reacting boldly and quickly against the outbreak. And what we've noticed from other countries that have gone through this a little bit more earlier on than Argentina, such as countries in Asia, early reaction plus more developed healthcare infrastructure has paid dividends against fighting the virus. And that has been something that Argentina has been able to do relatively successfully up until this point. Third, and this may be probably the biggest shock point on the presentation, or the biggest wow kind of call right here, is that we do think Argentina will default on its debt in our base case scenario. There are obviously alternatives in which they could come to a deal in the next week. Really, my main hope here is that nothing too major happens while I'm giving this presentation, because I've had several presentations in the past on Argentina where a major event happens, and we should know the answer to this question within the next week. So this presentation did come at a very timely moment. Four, we do expect inflation to become a problem after COVID-19. Many of you are probably alarmed by the amount of monetary printing going on in the country and the fact that interest rates have lowered by over 20 percentage points since the Fernandez administration has taken over, resulting in very negative interest rates. And finally, not to be too pessimistic here, just trying to be realistic, but it will probably be a long and relatively painful return to sustainable growth. But there are opportunities, and we're obviously going to end this presentation with a little bit more of a positive note, just because there are always opportunities no matter what the situation is. So I'm going to go ahead and start with this first section here, which is, obviously what's on everyone's minds. It's the headline of every newspaper right now. And I should say we're taking a relatively unique approach to this, analyzing COVID-19. And really, as it pertains to our analysis on Latin America and Argentina, we're monitoring three key economic variables that we think are very important, not just for Argentina, but all around the world. You can see that number one is for the recurrence, length, and stringency of social distancing measures, which I'm going to refer to as SDMs several times throughout the presentation. The second thing is government stimulus during and after SDMs. It's one thing to have stimulus now, but having it after is going to be just as important. And then finally, the timing and the timing of treatment and vaccine. I think this is the most important thing in the medium to long term for countries to recover. I don't think consumers are really going to go back to the same relative normal that we were at even at the end of 2019 until we have some sort of assurance that the virus is treatable, to take away that fear from going out and having your regular mobility. So I'm going to be spending the next 10 or so minutes on this section talking about all three of these factors. And the first one here is the idea of dancing. And I should say that we are basing this analysis off a really great article by Tomás Puello, which is called Coronavirus, the Hammer and the Dance. And if anyone on the line hasn't read it, I highly recommend it. It's probably the best analysis that I've read about the coronavirus and how governments can tackle or mitigate the problem from a public health perspective. And what we can definitely say is that everyone is kind of on this left side of the graph right here, the hammer phase. And really what this means is that governments are in full shutdowns. Many of them are doing more dynamic kinds of quarantines, et cetera, to try to build time and build capacities to be able to deal with the coronavirus going forward. And one of the things that, what will be next is this idea of dancing, which is basically the idea of gradually reopening and dealing with any secondary outbreaks if they occur. I don't think it's very realistic for us to assume that there's not going to be any outbreaks going forward. It's something that we've already seen in Asian countries that have been highly successful dealing with the virus, such as South Korea and Singapore. So it is necessary for governments to be really agile and ready to adapt to any sort of potential other clusters of new viruses that happen, whether it be later on in the fall or the winter in the Northern Hemisphere, or later on in the summer or the winter, I should say, in the Southern Hemisphere. But I should say not every government is going to be completely successful with this. And that's why we have two forms of dancing. For those of you who cover Latin America or Latin, you'll know that the samba is the Brazilian dance. It's a little bit more fast-paced. We're basically using this to describe a more effective dance. In other words, countries that are a little bit more fast at adapting to any sort of adverse situation with the virus. And the bachata is a little bit more of a slow dance, which is basically meaning that the governments are having a little bit less effective of a time. Obviously, a more pessimistic scenario would be if there are major outbreaks. That's something we're hoping doesn't happen. It's not something that we are assuming for Argentina. So this is really kind of a breakdown of the characteristics of these dancing skills, to put them, as I mentioned in the last slide. I'm not going to walk you through everything here. There's a lot of text on this slide, but all of these mattered for the hammer phase as well. But some of these are definitely going to become even more important for governments to get right in this next phase of dancing and controlling future outbreaks. The first thing is early reaction. This was really the key for Latin America reopening in the first place. This is something I think the Argentine government was pretty bold in doing really early on. The second is good information. This is something that's going to be extremely important, because the more information that you have about who has the virus, who might have the virus, and who has had the virus, the more targeted social distancing can be. And if you have social distancing very targeted, that means that there's less large-scale lockdowns. It means that the quarantines are a little bit more dynamic and less impactful to your economy in the medium to longer term. And obviously the opposite would be true if you do not have these testing and tracing capacities necessary. Third, healthcare infrastructure. This one's a little bit self-explanatory. The more beds, the better. The more ICUs, the better. All of this means that you have a lower mortality rate, not just of COVID-19, but any other disease or sickness or events for a reason to for someone to go to the hospital. And the fourth thing is endorsement from local authorities. And by that, I mean alignment with healthcare experts, multilateral organizations, and local authorities. The more aligned your leaders are with experts, the more people are likely to trust them and to believe them. And for example, if you have a situation in which the leader of a country is not listening to healthcare experts and they decide to open restaurants or shopping malls against the recommendations of many other people, the citizens might not go. And if the citizens don't go, that means that the economic reopening is going to be a lot more of a staggered process, and that is going to have an impact over the longer term as well. So with regards to everything I've said so far, you can see here that Argentina's response versus other Latin American countries has been pretty strong. This graph really only shows one metric that we could be showing of coronavirus cases, and this one is mortality rates per capita. And you can see Argentina's is pretty low, which is positive. The idea of this graph is to try to get it to be as flat as possible, because if this is measuring anything per capita, if you have the numerator being constant, you're going to have the line be flat. So Argentina is already doing a pretty good job, controlling any sort of more major outbreaks of coronavirus and deaths. This also probably reflects testing at least a little bit, because you can see Peru has accelerated its curve pretty quickly, and Peru is testing more people per capita in Latin America. And then on the other hand, you can see Ecuador is really rising pretty quickly, which is very concerning for us at the current moment. So as I said in the previous slide, Argentina's response has been strong, and this page explains the measures Argentina has taken until now. For those of you who are clients, this page probably looks familiar because we try to update this every week based on any kind of new news that we see coming out from any of the markets that we cover. And you can see that Argentina was on a full lockdown beginning in mid-March. It's starting to slowly phase out of it. The city and the province of Buenos Aires are notably still in full lockdown, but many other provinces have started to ease some of their social distancing measures. Meanwhile, Argentina was one of the very first countries to announce a full lockdown in Latin America. Colombia and Peru were also pretty quick in doing that, as opposed to, you can see that Brazil and Mexico have not been quite as bold at containing the virus versus Argentina, Peru, and Colombia. But it's one thing to say that the policy was there. It's another thing to say how well was it followed? How much did people actually abide by the regulations that they had? This chart shows mobility data. It's a project that Apple and Google put together to kind of measure how well or how much or how little people are moving around versus January 13th. And you can see that Argentina is actually the least mobile country in this current moment, at least measured by walking. And this is definitely notable because other countries on this list, such as Colombia notably, are also on full lockdown, but have not been quite as successful in having people not circulate through the streets or walking around, generally speaking. And that's definitely a really important thing, and it probably is a main reason why Argentina's amount of confirmed coronavirus cases and confirmed coronavirus deaths has been relatively low compared to a lot of other countries in the region. So the second variable for our analytical framework of COVID-19 is fiscal capacity. I'll spend a lot more time on this topic when we talk about debt negotiations, because everyone knows that Argentina's public financing situation is complicated. All I would mention here is that Argentina's tough fiscal reality has still not stopped it from the economic stimulus necessary to avoid a complete breakdown of the economy. And you can see on this page that they have enacted a good amount of social measures. The next slide I'll show you does have a couple of the specific points from Argentina's fiscal stimuli up until this point. But really, you can see that this is focused on employees, protecting employment, generally speaking. Argentina is actually one of the few countries in the region that has completely banned firing, and to try to keep companies from not going totally bankrupt from this, They are supplementing salaries from employees of not just small, medium-sized enterprises, but also somewhat more larger companies. And they're also focusing a lot of their credit relief on these small and medium-sized enterprises. Overall, we can kind of say Argentina is probably in the middle of the pack as far as size of the fiscal stimulus up until now. Argentina doesn't really count on the same savings that Chile and Peru does in this instance, and that would be a major explanation of why Chile and Peru's fiscal stimulus packages have been closer to 10%, and in Peru's case, much higher than 10% of GDP. But overall, Argentina's has been around 2% of GDP up until this point, but we fully expect these measures to be expanded. Anyways, as I was mentioning, here are a few of the specifics. I'm not going to spend too much time here since I kind of gave a quick overview of where Argentina was up until that point, but we should expect more things to be added to this list later on. So lastly, we're going to put these two economic variables together. This is not our scenarios for Argentina. Rather, this is just a framework of looking at COVID-19 scenarios for the whole region. And you can see we've plotted different countries' flags along this grid, with the y-axis being the government economic response, which is what I just talked about, and the x-axis being virus containment success, which was the first part, the first variable that I mentioned. And you can see Argentina is faring pretty well when it comes to actually containing the virus. So pretty far to the left, but it's pretty low on the chart, meaning that we do think that Argentina will have relative success containing the virus, but the economy will suffer, unfortunately. Last but not least, as far as it pertains to this analytical framework, is the timing of a treatment and a vaccine. And this is really highly speculative. I'm not going to lie. No one really knows when we're going to have a treatment or vaccine for sure. But what we can say is that hopefully it will happen sometime in the next 2 to 3 years, with all the medical community focused on these efforts at the moment. I should note that the fastest vaccine ever created and approved was the one that just happened with Ebola in December of 2019, which took 5 years. So we do expect that this vaccine will take less than 5 years, just because of the factors that I mentioned a second ago. And it's also important for me to mention that it's not just about the timing of the vaccine, but also the distribution and the access to it. And we determine good access in the sense that 50% of critically sick patients can get access to the vaccine. And the reason why I think this is important is because if we do have the vaccine created in the United States, Western Europe, wherever it is, it needs to be delivered to other parts of the world. And that's not something that just happens overnight. And to that end, we do have rough scenarios for this, which is going to have an impact on my 2021 numbers especially. But our base case is that we're going to have a moderate access to a vaccine by the fourth quarter of 2021. A more negative scenario is that we don't have one even through early part of 2022. So overall, this is, again, pretty speculative. And from this point on, we're just going to assume that the base case here is going to reign, and that is going to play an impact on my scenarios and my overall analysis.
Great. Thank you, Alex. That's a very helpful overview of Argentina's reaction to the crisis, more on the healthcare front. I would say now participants are probably eager to understand how this translates to some of the more economic challenges and what the biggest impact to Argentina actually is for their businesses, right? I wonder if you go over to that now.
Yeah. I mean, it's a great question. Obviously, I'm going to talk a little bit more about our forecasts in the section after this one. But as I was mentioning, Argentina is entering its third year of recession. It's in the middle of debt talks to avoid a default. So unfortunately, I do believe firms, investors, individuals, what have you, need to embrace for a double hit this year and a deeper economic recession than we originally anticipated. You can see here with the chart on the left that Argentina hasn't had growth since the first quarter of 2018. It's a long time, making 2020 most likely its third straight year of recession. And if we gaze over to the faster moving indicators on the right, you can see that the Argentine economy wasn't even growing in January and February. And what is more is that you can see some of the early impacts of SDMs on Argentina's economy in March a month which we saw retail sales and construction both plummet by over 40%. This should be something that we should probably expect in March, April, and probably part of May as well. And this is the result in the second quarter of the year being probably one of the worst on record. So, assuming that the coronavirus it does inflict pretty massive short-term damage on Argentina's economy, I'd like to spend this part of the presentation and really most of the presentation from here on out talking about some of the factors that we think are more specific to Argentina. And what you can see is that we have 4 factors here that I'm going to walk you through a couple of slides each over the next 10 to 15 minutes, with external factors being the first one, and then we'll start talking about the debt, inflation, and FX imbalances, all things that I mentioned in the marketing email going into today's webinar. So as far as external factors, I first want to make it pretty clear that Argentina will face a pretty substantial decline in both imports and exports this year, but Argentina is not unique in this situation. Most other countries in the world are expecting a pretty substantial decline in trade. And you may ask yourself, why does this matter? Because the chart on the right shows that exports as a percent of GDP for Argentina isn't super influential, like how it is for Chile and Mexico. But right now, more than ever, export revenues matter. And this is because Argentina's primary source of hard currency is trade. Some of you may remember in 2018, the beginning of the year, we had a drought, which caused export revenues from the agricultural sector to totally dry up. And this was one of the things that was one of the first catalysts for the currency crises that we saw that year, because there simply just wasn't enough hard currency in the international reserves. And you can see here that low and volatile export revenues have been an issue and can explain Argentina's dwindling reserves. You can see pretty big drops in 2018, around the same time that Argentina had its 2 pretty massive peso depreciations that year. The government tried to defend the currency several times during those 2 episodes, but honestly, it didn't really work quite that well, just because there wasn't that inflow coming in from agricultural exports. And really, this matters for 2 separate reasons. The first one is that the peso has depreciated a lot, and this relates to the debt situation because as the peso weakens, it becomes more and more costly to pay the debt that's denominated in U.S. dollars or other foreign currency. This is clear, and that this is the main reason why the external debt burden as a percentage of GDP has risen significantly in Argentina. And it's also a reason why now, when we can see that reserves have fallen pretty substantially in the last quarter of 2019, that Argentina is running out of reserves to help the Treasury pay its debt, on top of the fact that the Treasury is just not bringing in enough tax revenues in peso terms to pay the debt. So to summarize this section, exports matter to Argentina because it's a primary source of hard currency. And it's important to measure the performance of Argentina's major trading partners. And this chart shows Argentina's top 5 export destinations. But it's kind of a folly for anyone to expect exports to save the day for Argentina like they did in 2003. After the default from 2001, Argentina was able to rebound pretty sharply during the 2000s. A lot of this had to do with really high commodity prices and very, very strong demand, especially from China. But to that end, it's not going to be a repeat of 2003 in all likelihood. And one of the longer term goals, at least in my opinion, for the Argentine government should be to try to expand and diversify its export basket to make it a more reliable income source for the country. So now we turn to one of the hot topics of the day. Again, to my comments that I said at the very beginning of the presentation, I hope that nothing has changed since I finished this deck at 11 p.m. last night. And, all of these slides are probably going to become somewhat obsolete in the next week. These will probably have an answer to this question. But nevertheless, I did want to spend this time explaining to you all what our thought process has been during this process, because the debt drama really began back in August of 2019 when Macri lost the PASO to Alberto Fernandez, which caused a really massive peso depreciation and a huge spike of country risk. And we really believed at the end of 2019 that the government would need to make a deal to renegotiate its debt, probably in the first quarter of 2020 or early in the second quarter of 2020. And here we are. We're in May. We're on the apex of the debt negotiations. And just to give people a little bit of context on the phone, Argentina entered a 30-day grace period on a coupon payment that was owed to New York law bondholders for about $500 million. This expires on May 22nd, which effectively gives the government one more week to try to come to an agreement with creditors. The government released its initial deal to creditors around mid-April. I'll show you some of the details of that momentarily. But really what this means is that, Argentina does need to make a deal very soon. In other words, otherwise they're not going to be able to pay the coupon payments that they are owed for May 22nd. One thing that I'll mention is that Argentina has already defaulted, at least in our view, on locally issued foreign currency debt. They basically pushed all the payments that are shown here in this graph to 2021. This graph shows what the government would have paid through this year. On the right side of the screen, you see kind of some back of the envelope math that I did to try to figure out whether or not Argentina would have the reserves to help the Treasury pay this debt. Theoretically, Argentina could pay the rest of the remaining New York law and multilateral debt remaining for this year. But, we highly doubt that's going to happen. And the main reason why that is because COVID-19 has basically shifted the government's priorities to spending to mitigate the short-term impacts of social distancing measures. And, I think this is rightfully the case. I don't think anyone's blaming the Argentine government for focusing on this and not on payments of the creditors. But overall, this is kind of the point that I'm going to try to make, is that next week when that coupon payment is due, unless there's a deal basically on the very, very, very short horizon, I doubt that the government would pay the $500 million coupon to creditors that it could be using to help alleviate the impact of social distancing measures on the population. So this is probably the one page where I have the most amount of speculation going on in the presentation, and definitely the one that's going to be obsolete after next week, potentially. But really the main takeaway that I have here is that the government and creditors have a lot to align on in only 8 days to possibly avoid a default. And you can see that the first three items here are specific elements from the deal. The last two elements would be things that the government could and probably will add to the existing proposals for a modified proposal. If we go from left to right on the columns, you can see the first one is alignment with creditors. So if you have a 5, it's a total disagreement. I do think the 3-year grace period is probably the one thing that creditors are probably least happy about. I think a lot of creditors have been quoted by saying that it would be nice if there would be at least some sort of payment in the next 3 years, whether it be just like a one-time cash payment 2 years in or what have you. I think the step-up coupon of only 0.5% per year, honestly, it's a little bit paltry if I'm to give my opinion about this. I think the government's trying to argue, well, it's higher than the risk-free rate in the United States. Sure, but that's the United States, and I think that creditors are going to want a higher payback on these bonds going forward. So going further to the right, level of importance, I think the level of importance about the principal haircut, gave it a 1 just because I think that it is in total agreement. I think the creditors were probably pleasantly surprised by the amount of the principal haircut. And then you can see that the 3-year grace period and the coupon rate, I think, are pretty important. And then I think the one thing that's been the most important thing is a macroeconomic plan to determine repayments. At this case, a bit of a lack thereof. I think if the government comes out with a really compelling and credible macroeconomic plan to determine repayments of the debt that they will swap next week, then I think that creditors would be more likely to accept. And then the right-hand side, likelihood to come to an agreement. I think that, again, the macroeconomic plan is going to be relatively difficult. The government put out some sort of rough numbers of what they expected in the long term, but it was basically below 2% GDP growth like 10 years down the road, which I think is honestly really pessimistic. This could end up being coupled with the GDP-linked warrant pretty well to maybe incentivize creditors to say, okay, you know what, like you're being very pessimistic with your forecasts, but at least we believe that we could get a higher deal out of this if you end up growing by way more than that, which is definitely a possibility. So overall, based on what I just showed you and the fact that the government literally has 8 days to come to an agreement with creditors to either think that they have a deal imminently or they will likely default, I think that it's important for firms to brace for a likely default. Again, I do think this is the base case at this point. The left side here has some of the reasons why default could happen. The second column with the immediate impacts from the default, it's going to put really high pressure on the parallel exchange rate. This definitely has inflation implications, and it will likely result in the government needing to either purposely devalue the exchange rate, at least at a somewhat high amount, and or implement stronger import restrictions similar to the ones that we saw during the Christina Kirchner era back in 2015. We should not rule that out. But if there is a positive takeaway from this section, what I do want to say is that, Argentina defaulting means an official lockout from international financial markets. The government has said numerous times, well, we're in virtual default. These interest rates are so high. But if they do default, it does mean that they are technically locked out from international financial markets. And to that end, businesses and the government alike will need to finance themselves to get back to growth, especially later on in 2020 and early 2021. So to that end, we do think if the government defaults that there will be new talks beginning to restructure the debt starting next year. I don't think this will be another repeat of 2001 where we didn't have a swap agreement until several years later. I do think the government realizes that a one-sided default or unilateral default here without any sort of solution is not the ideal outcome. So next, talk a little bit about inflation. Related to what I was saying about Argentina's fiscal troubles, the country's inflation situation is still rather complicated, and it's unfortunately likely to get a bit worse. What Argentina has going for it right now is something I'm going to talk about in a minute, which is ironically FX stability. This has been something that has plagued Argentina's inflation during especially the last year of the Macri administration. But that being said, there is a significant amount of monetary base expansion going on. And because of the fiscal situation I mentioned, really the only way to finance any sort of fiscal deficit is by printing money. Why does this matter? Or I should say, why does inflation matter so much? Because Argentina has dealt with chronic inflation for a really long time. It matters because it's very tough to have a sustainable consumption recovery if inflation is going higher than nominal wages, which has been the case for a really long time. It's something you can see in this graph. The real wages have been contracting since the end of 2018, even earlier than that, actually. So the reason why I said that I think inflation will likely get slightly worse is primarily due to the monetary expansion, which is what this graph on the left shows. To be a little bit more blunt in my definition of what this means, it basically means printing money to finance government operations. And you can see that I do have a call out here saying that the monetary base has increased by approximately 26% year to date. Another call out I could add here is that this has been 20% since March, which means that all of this has happened in the last 3 months. It's something you can see in this graph with the big peak that's a little bit at the very end of this graph. And, that's not something that's super sustainable. Right now, it's not necessarily inflationary, but when activity starts to pick back up and people are going to start demanding more pesos again, and that's going to happen if anything goes back to normal, then if the central bank doesn't have a way of mopping these pesos off the streets and, buying pesos back up, and the monetary supply remains so high while demand goes up, you're going to eventually start having an impact on inflation. And that worries us. And it's something that we are considering for our forecast, which you can see on the bottom right-hand side of this page. And on top of the fact that the BCRA, or the Central Bank of Argentina, is what the acronym stands for, is financing the treasury, price controls and currency controls are going to become more and more inflationary to undo. And the Central Bank of Argentina has reduced the benchmark policy rate substantially. So last but not least, growing FX imbalances. There's only one slide here, but what I'd say is that this is becoming more and more concerning, the breach between the black market exchange rate, which in Argentina we can refer to as the dollar blue, even though there are several other black market exchange rates going on right now, such as the dollar MEP, the dollar liqui, etc. And you can see that there's a pretty substantial breach between the parallel exchange rate and the official exchange rate right now. And meanwhile, the regular FX has been relatively stable. And this is going to become a problem if, especially if Argentina defaults and there's more capital outflow. It means that there's going to be more and more pressure on the parallel exchange rate, which is going to start having an impact on inflation. It's also going to have an impact on the market value of the peso, which is more accurately reflected by the parallel exchange rate, at least to a degree. And it also means that the real exchange rate, which is what we measure the peso against other of its trading partners and how competitive the peso is, you can see that the peso is already starting to lose some of its competitiveness through the real effective exchange rate. And if we get to the point where it starts to become overvalued, then the government needs to say, okay, then what is the outlet here? Because we can't export at a very competitive rate. And we have the parallel exchange rate expanding significantly, putting pressure on inflation. All this is to say is that I do think that the peso will begin to depreciate at a much more accelerated pace throughout the rest of the year. So here, just to summarize this section before moving on to our forecasts, out of everything that I've said so far, which of the following risks concerns you the most as it pertains to your business in Argentina? You know, obviously there's COVID-19, the economic impacts, depressed external demand, a potential sovereign default, rising inflation, uncertainty regarding FX. And for those of you who are still using your phone, really all you need to do is just refresh the page that you have open, and it will immediately put you to this question.
It strikes me as if some of these points are kind of inevitably correlated, right? With Argentina not being able to catch a break and FX risk and inflation looming behind this potential default, do you think it's a possible scenario for the default to not actually happen, especially with the perception people have of the relationship that Argentina's had with creditors over the past several years?
Right. No, it's a good question. Like, I do think that there is a way to avoid a default. There have been rumors about productive meetings between creditors and the government over the last couple of days. I definitely won't completely rule it out. I hope for an agreement, obviously, but it just seems like the timeline is so tight right now. And I think the other potential option is that the government does come to some sort of standstill agreement with creditors, but I haven't heard any rumors about that happening. And again, with only a week to decide, the timeline's pretty tight. Anyways, it looks like we have a lot of the answers in. I'm actually pretty surprised to see that the uncertainty over FX is one of the higher rated things here. I think that's fair though, because this does recall memories of the dollar blue breach being really significant during the Cristina Kirchner administration. It causes a lot of business uncertainty. You have to ask yourself, is it possible to import at a more favorable rate? Or do we have to follow by onerous restrictions in the future? There's definitely a lot of uncertainty here, and I don't think that there's a real answer to what will eventually happen with FX. I think there's a lot more uncertainty there than, say, with the inflation or with COVID-19 even. So this last section, and we have about 15 minutes left, I'll probably spend 10 minutes here, maybe a little bit less, and go really quickly through our forecasts. One thing I'll mention is that these were our old forecasts, and basically, for those of you who are not too familiar with Ducker Frontier, we operate under a scenario-based framework of thinking. So we do create scenarios to go forward with how we think about our thinking here. And what you'll see is that these are the new forecasts that we have for Argentina. This is our base case. What you'll see is that we are expecting a very significant contraction of 7.1% in 2020, followed by a bit of a rebound to 3.6% in 2021. Again, this is probably one of the more pessimistic forecasts that we have for Latin America, based on the twin storm that we talked about with COVID-19 and a potential default. And then right now, with how long social distancing measures have stayed in place, it's just the reality of the situation. So if you recall what we just showed on the previous page, I think that it's safe to say that 3.6% rebound is certainly, it sounds like a good thing. But if you look at this chart, which is basically indexing GDP to 2019, what you'll see is that you're looking at a very, very, very gradual recovery back to the same level that we had in 2019. In fact, we're not projecting Argentina will make up for lost ground from 2020 versus 2019 until 2023. Lastly, you can kind of see this in our quarterly scenarios as well. This is a very similar chart to what I just showed. What you'll see is that after third quarter recovery, and again, any sort of normalization of activity and going back to work is going to cause this rebound. It's just a statistical effect. But after that, you can see, at least on a quarter-on-quarter basis, you're going to get a significant moderation. Even our base case is more of a flattening, and our downside is actually a little bit of a decline once we get into 2021, once some of these other macroeconomic imbalances come into favor. So I would like to hear from you, though. So that's just my opinion. I do think that there will be at least a little bit of a recovery in Q3 2020, but it won't be enough to make up for even where we were in 2019. So I ask you, when do you think sales will start to pick up in Argentina? Okay, this is interesting because, we've given this question to numerous different webinars over the last month and a half or so, and the consensus had been Q3 2020, and it's clear that I'm seeing a lot more answers towards the end of the line, towards not until 2021. This doesn't surprise me too much, just because I think of what I'm talking about now. Argentina's outlook is definitely a little bit worse than a lot of other countries in Latin America. But on the other hand, we're starting to learn more and more about economies opening back up, and you can see that it is taking longer for economies to open back up throughout the world than we may have previously expected. So I'm going to go ahead and move on from here, but thank you for those answers. To finish off this section, just to talk a little bit about our scenarios, basically the x-axis is all the internal factors that I've talked about until now: debt situation, inflation, macroeconomic imbalances, political capital. The y-axis is our external factors, so the degree and timing of global market sentiment and trade. And what you'll see is our base case assumes that imbalances are at least partially addressed in 2022. You start to have significantly lower inflation. You start to have the staple and some of the other price and capital controls removed. And then we're also assuming external U-shape from the external environment. All of these names are based on the amount of time it takes for Argentina to recover back to its 2019 levels. So you can see that our upside is a 2-year recovery, our downside is a 5-year recovery. And, not to be too, pessimistic here, but the extreme downside is that we don't have recovery to the 2019 levels for over 5 years. And I would just call that a lost decade. And really, you can see here all the forecasts that we have, including the average peso value per dollar that we have each year. We do forecast average peso to the dollar, not end of year value. And you can see that the 3 main takeaways here is that we expect that the peso will continue to depreciate. Even in the more upside scenario, we're expecting a pretty severe economic contraction this year. And the third thing is, if you look at the inflation internal factor lower on the screen here, you can see that we're still expecting inflation to be quite elevated in Argentina in 2021. I will say that the main difference between the extreme downside and the downside is that we do expect hyperinflation in the extreme downside, which would result in Argentina's economic performance being a continued recession until 2023, most likely. So obviously there was a lot of information on that page. I'm going to share with you this presentation after we finish the presentation, but I only have about 5 more slides left. I'm going to go through them really quickly, talk a little bit about what is the so what of everything that I've said up until this point. And here you can see that these are some of the things that some of our clients are doing right now in these 4 buckets. You can see that, at least in the short term, the priority has been to protect cash. It makes sense. The next slide I'm going to show you is some of the ways that our clients are doing this. The medium term, I would say that this is kind of getting more ready for going back to work and demand planning, so determining when you start to see revenues pick back up. And then the long term, which is something that I think not everyone is thinking about right now, but I think that firms should be thinking about this, is what does the new normal look like? I do think there are some themes of this situation that are going to be sticky. I think there are other themes that will probably go away once we're out of quarantine. But it is important for companies to start rethinking work culture and office spaces. What does the talent acquisition process look like? What does demand planning look like, et cetera? So the short term, these are what some of the strategies to protect cash that some of our clients are using. These are broken down into revenues, OPEX, financial and tax, CapEx, and working capital. I think some of the main things here are just trying to try to push revenues any way possible. A lot of companies are turning to e-commerce. Companies are trying to cut OPEX any way they can. Financial and tax trying to take advantage of refinancing loans with a more favorable interest rate environment. I think it's pretty clear that most companies have started to freeze or halt CapEx investments. And as far as working capital, this is probably the one thing that requires the most nuance. But this basically entails trying to reduce days of sales outstanding as much as possible and extending days payable as much as your partners are willing to do. So the second to last poll here basically asks, which of the following are you concentrating the most on protecting cash up until now? A lot of these are things that I mentioned on the last slide, but I'd definitely be very curious to see how this is specific to Argentina and your business there. So it looks like we may have a bit of an error on this page, so I'm just going to go ahead and continue. So lastly, what I'll say is that there are diamonds in the rough. We can't end this conversation with it being extremely pessimistic. We have to think about opportunities. And I do think that we can, kind of define these into 6 broader categories of broader business implications in the short to long, medium term for Argentina. You can see that, the FX and economic environments, you may have some sort of risk on opportunities where you can take advantage of leveraging lower valuations and risk off environments expanding organically in Argentina. In other words, M&A, if that's the mandate that you have in Argentina, is to expand no matter what, then that now might be the good time to leverage these low valuations. Accelerating digital transformation is something I think companies are being forced into right now. But ask yourself how you can differentiate yourselves and do this more effectively than your competitors. Third, supply chain dynamics pushing for localization, especially with the peso depreciating and potential import controls on the way. Value proposition, adapting your value proposition to new customer behaviors. Then finally, entering new provinces and forging new non-traditional partnerships to expand market access. So what I mean by this is like partnering with your e-commerce players like Rappi if you're delivering, say, alcohol, or if you're an IT company and want to promote working from home, maybe you partner with manufacturing of furniture and stuff like that to try to create co-bundling packages. Then organizational footprint, very similar to what I just said. Generally speaking, rethinking the office space. Do we need to be spending so much money on commercial real estate? So the last question I leave you with is, where do you see the biggest business opportunities for your company in Argentina? And I would love to see what kinds of ideas you have in mind. And of course, you can pick one answer from the following. So good. It looks like this polling question is working. Not sure what happened with the last one. Again, all you need to do at this point is just refresh your screen on Google Chrome or whatever outlet that you're using. So far, it's not really too surprising to me that we're seeing a lot of companies trying to accelerate digital transformation. I'm also not surprised to see a lot of people are trying to adapt value proposition to what the new normal looks like. Give this maybe 5 more seconds, Sebastian, that we can start with any of the questions that we've had from the audience up until this point.
Sure.
Maybe I can just leave it here. Have you had any interesting questions come in until now?
Yeah, absolutely. So thank you, Alex. This has been super insightful. We've had a couple of questions pour in already, and to the rest of the audience, feel free to continue sending those in. If we don't get to them by the end of the call, we'll have your relationship manager reach out addressing them. I think one of the interesting ones I've gotten here is about the possibilities for Argentina's government and private companies to access the debt market if the default is avoided.
I mean, that's a great question. I mean, one thing I'll say is that if Argentina avoids the default, a lot of private companies in Argentina, especially ones that have been pretty financially sound or have pretty big market caps, will still probably be able to access credit at somewhat favorable terms. One example I can give is I remember when Argentina defaulted in 2001, you still had the national oil company issue debts after that during this even the stage of default there. So I don't think it wouldn't be super difficult for companies to tap the credit markets again if a default is avoided. But I would say that interest rates will probably be pretty high for a little while until we start seeing things start to calm down across the global financial scene, especially within Argentina.
Perfect. So I think we're coming up on time now. So let's just wrap up with this final question. This one's a bit trickier, Alex. I know you addressed opportunity in the context of certain channels and different areas, but one of the questions we've gotten here is if you could maybe shed some light on potential sectors and industries that could stand as winners for Argentina, considering the global context. So I assume the audience here meant potentially in the context of exportations and global trade.
Yeah. No, it's a good question. It's something I would have liked to cover in this presentation. I would say in the shorter term, construction is probably going to be one of the winners. Obviously, the chart that I showed probably 20 pages ago that showed construction contracting by like 40% is not super reassuring. But I would expect the government to start ramping up infrastructure investments and public works investments pretty shortly after the pandemic ends. I think in the longer term, mining is still a pretty big opportunity in Argentina, especially lithium. I don't think the demand for batteries and electric vehicles is going to go away anytime soon. And Argentina possesses one of the biggest lithium reserves in the world. I think that's one thing that also is very important. Outside of that, I think consumer staples will still be a good play for a little while consumers are really only focusing on trying to provide themselves the basics. I don't think you're going to start seeing consumer discretionary recover or durable goods recover really probably until late this year, maybe not until 2021. So maybe that's a longer term play. But overall, I think if I would just stick with two industries, construction in the short term, mining in the medium term, and then if there's some sort of miraculous rebound of oil prices, then maybe oil and gas, but that's not something that we're expecting either. Great. Well, we've arrived at 10 o'clock. As Sebastian said, if you have any lingering questions, I would be happy to address them either via email or a follow-up call. Until then, it's been a true pleasure. I hope this presentation has been helpful and could shed some light on how we're seeing Argentina and how it could impact your business over the next 2 to 3 years.
Excellent. Thank you, everybody. Bye-bye.
Bye. Have a good week.